Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which it's another week of volatility and uncertainty, but volatility in the bad sense. There's been a huge range this week, not a lot of advance and progress. We are in between the previous all-time highs and the now new all-time highs. We are stuck there, but why? Because we are in a, again, situation in which tariffs take the center spot. This week has been decidedly negative. The optimism that had been building has been abruptly destroyed by a barrage of aggressive and unpredictable tariff announcements. Basically, the primary driver of this negative shift is an escalatory and wide-ranging trade policy. The most significant of these announcements is the proposed 50 tariff on copper imports, which critically includes now, as of this morning, refined metals. Copper is the lifeblood of the industrial economy. It is a fundamental component in everything from construction and manufacturing to electronics and power generation. A 50% levy on such a crucial commodity is not just a tax. It is a direct and potent inflationary shock. It will inevitably raise input costs for a major array of American industries, and these costs are likely to be passed on to the consumers. This was not an isolated action. The trade offensive broadened with an announcement of a 35% tariff on goods from Canada, one of America's largest and most integrated trading partners. This was followed by threats of a 25% tariffs on both Japan and South Korea. These are not minor economies. These are industrial powerhouses and crucial links in the global supply chain. Even more, the most alarming development is the systemic risk introduced by the threat to impose an additional 10% tariffs on any nation that aligns with the administration, with what this administration deems to be anti-American quote-unquote policies of the BRICS bloc. This is a monumental escalation. It moves beyond specific trade imbalances and into the realm of geopolitical punishment, potentially destabilizing the entire global trade framework. It forces a stark choice upon neutral or developing nations and could fracture the world economy into competing blocs, and a scenario that would have devastating consequences for global growth and stability. In other news, the Federal Reserve, what is doing? Well, this aggressive trade posture has thrown the Fed into an extraordinarily difficult position. The prospect of widespread tariffs threatens to undo what progress that we are almost at 2% target. This dilemma was articulated perfectly by the Fed Goldsby, who explicitly warned that these new tariff threats could delay the much anticipated rate cuts that the market has been pricing in for weeks. Also, a public statement was issued by the chairman of the Federal Housing Finance Agency, William, in which he said that he was encouraged by reports that Jerome Powell is considering resigning. Wow. Because the internal division and uncertainty at the Fed were laid bare in the recent FOMC minutes. The FOMC minutes showed a fractured committee, with a couple of participants open to a rate cut as soon as this month meeting, July meeting, with some participants said that the most likely appropriate path would involve no rate cuts in 2025. We have a big fractured committee. Well, In terms of economic indicators, there are some pockets of resilience in the US domestic economy. We had US initial jobless claims with a positive significance, going down 227,000. This is lower than expected numbers, which basically it continues showing strength and tightness of the US labor market. Also, the federal budget balance, 27 billion. A surprise surplus in a very strong fiscal signal. But there's no more news. This week has been the news of the fundamentals and the big tariffs announcements. In other news, we have basically Nvidia becoming the first company in history to reach a 4 trillion market cap. And Nvidia continues pushing. As we can see basically in the charts, we are seeing how Nvidia it's basically destroying. This is a weekly chart, by the way. Look at the daily. There's a lot of volume down here. There's this pocket, and then we have nothing. We have all-time highs, clear skies for Nvidia to just continue pushing with this rally. So the first 4 trillion market cap, and it closed down here, as you can see, 4.02. So apart from this, we had some airlines reporting earnings. Basically, we had some Delta Airlines and some other companies reporting earnings, positive earnings, which basically show you that the consumer is not giving up. It's still buying, still consuming. And this is why the US is so resilient, because of the consumer. If we check the consumer discretionary, we are still there pushing. This was the break, and we are still there trying to push. Financial sector is pulling back from all-time highs. We got a red Friday yesterday, but overall, on the weekly, we are still there. So the US has big consumer support. And this is something that we have to take into consideration every single time. In terms of market internals, we had the middle of the week being pushed, but on Friday, outflows. And it was a red Friday to finish the week on the Nasdaq with, this is the weekly, as you can see, this is a doji in between the all-time highs and the previous all-time highs. In the 1 hour, we can see how we've been in a range for the majority of the week since Thursday. We've been ranging, and this is super difficult to trade. I've been trying. I'm positive on the week, barely, maybe a couple of hundreds. I'm trying to keep my head above water, because this is insanely difficult to trade because of the tariffs, because of the geopolitical risk. Every single tweet, news, article is going to move the market insanely. So this is pretty difficult. If you feel like that, don't worry, because we are all in the same boat. Don't worry. In conclusion, the outlook for the US stock market has turned decidedly negative. There's, as I mentioned, a lot of tariffs news, and we are still showing strength in the domestic labor market. And the powerful AI trend led by Nvidia, maybe these are being eclipsed by the immense and growing uncertainty stemming from an aggressive trade policy. So what is for next week? No one knows. I'm still waiting for pullbacks. We have this daily, we have a 1 hour, we have a pivot, a big pivot at 20,000, barely 21,000, and we are 2,000 points above. So definitely, I'm waiting for a pullback still. I don't know if it's going to be a small pullback, 4%. If we are going to pull back all the way down 10%, maybe everyone will become insane with a 10% pullback. But it will be great for long-term opportunities to have the Nasdaq down here. This is insanely choppy. And nothing else. Next week, we are going to start seeing earnings from the banks. Big time. So be on top of every news, not only because the banks are reporting earnings, but because of the tariffs. And from next week, banks, then the start of tech companies. I mean, this July, it's starting to look pretty stressful. So as always, take your time. Remember that patience, discipline, and risk management are key for your success. Have a nice weekend and see you on Monday.